Well, for more on the latest rate decision and the state of the U.S. economy, I'm joined by Saruhan Hatipoglu, CGTN's global economics analyst and CEO of BERI. Welcome back to the show.
Pleasure to be here.
So, the Fed's first policy meeting of the year. Any surprises for you?
Well, it was a big surprise. I think the person who walked into the podium was Jerome Powell. The person who walked out was Janet Yellen, because he's completely changed his tune, and it was right to do so because of what happened in the fourth quarter of this year. Now, the change, though, when I talk to my clients, is a little disturbing for some, because he really did a 180 degrees, not only about the interest rate decision, which could be done. You look at the data and you make up your decisions, but the unwinding of the portfolio. When he said we were firm on the selling of the bonds that we have, and then he took a step back from that, now the question becomes, what if the economy really takes off? What if the China deal is reached? What is the Fed going to do? Is it still going to be like this, or is it going to go into the tightening mode again? So there's a little bit of confusion here, but today sent the right message as things are.
Now, some people were concerned about the political influence that President Trump might have on the Fed and its rate decisions, but talk about some of the data points, both domestically and globally, that you think Powell was looking at when he made his decisions today.
Well, I think what was not reported, or not reported enough today, was his comment on the shutdown. He said, we cannot take another one of those. And if you look at the data, which they tried to do more so at the Fed, you're seeing that there was 0.13% contraction in GDP per week because of the government employees as well as the federal contractors, which not many people are talking about, because if you look at the federal workers, salaried workers, their number has stayed around 2 million for the past decade. But the number of federal contractors have increased quite a bit, and they've suffered a lot in this shutdown. Now, in 2013, when the shutdown happened, it was much less. The spending by the federal workers declined about 13 to 15%. So these are serious numbers. And if it repeats again, and we don't have an end in sight, which we didn't this time around, the impact on the economy will be far more pronounced. And I think that's something that they're really closely watching.
And especially with another deadline coming up to reestablish whether or not the government will be shut down. And we also have this idea that this standoff over the border wall and funding may be a precursor to the bigger argument on the debt ceiling that's coming up this year. What are your thoughts on that?
Well, the debt issue is really complicated. The administration point is that trickle-down is going to work. When you look at the GDP forecast, it is declining. When you look at the federal deficit, it's been increasing 2.6 to 3.4 and 4% now. Federal debt is 78% of GDP. Rachelle, that is twice the average in 5 decades. That's a huge number. And the forecasts show that it is going to hit 150% in 30 years. There's absolutely nothing that would prevent this from happening. So the issue is going to be about this government understanding that the economy is actually slowing down, that they're not going to get that 3% GDP growth in the next 10 years, and kind of addressing that so that they could avoid this fiscal cliff, because we're nearing to it.
And in terms of the strengths and weaknesses that you're seeing right now in the U.S. economy, what stands out for you?
The main weakness, I will repeat myself from last time we talked about, is the corporate debt. It's $9 trillion, 47% of GDP. In 2007, right before the financial crisis, that was 4.9 trillion. That's 86% higher now. Now, you might say, so what? They'll take debt and they'll do productive things with it. And if there's trouble, they have cash. Well, cash to debt ratio is 12%, which is the lowest ever. You look at leverage loans, that off the high yield market, it was 25% of it in 2007. Now it's 80%. These are huge numbers. I'm still worried about it. Thankfully, GDP growth has not slowed that much. But if it does, junk market, bond market is going to be the first to go.
Now, let's also look at the impact of other global events that are going on. Obviously, you have uncertainty over Brexit. You have Venezuela's political crisis, the ongoing U.S.-China trade tensions, China's economic slowdown, and obviously slower global growth overall. How do you see all that playing out for the U.S. economy?
Not good. Jack Howe of Barron's so aptly characterized it a couple of weeks ago. He said it's a macro sneeze on an investor salad bar, because valuations are so good right now in the stock market. We did a good performance today too, especially with techs. But there's so many problems, and we don't know how we're going to solve these problems. Brexit is a complete mess. Eurozone is slowing down, and the ECB is giving messages, conflicting messages. They don't know what they're going to do. They were talking about raising rates at the end of this year. That's definitely not going to happen. They're even talking about now doing some kind of an easing by giving longer-term loans to commercial banks. Another bond buying, maybe giving forward guidance on interest rates. So they're kind of desperate. Japan is stuck. China, like you said, slowing down. So we have a trade issue that is unresolved. All of these things, everything has to go so well for the global economy to do well this year. And I don't see concrete signs that that's going to be the case.
So what should investors be keeping an eye on in the coming weeks?
Investors should be watching how the situation over the next shutdown, which is in 2.5 weeks away, is going to be unfolding. They should be really, really careful with the stock market performance. They should not look at today's performance and say, we turned the corner, everything is going to be good now. They need to look at how Brexit is going to unfold. I'm expecting some good news there in that there's going to be an extension of the time that both sides are going to agree on. But still, we need to see, and investors need to look at these subtle points that show an out in the key conflicts that we have. If they don't see it, we're going to see another sell-off in the markets.
Saruhan Hatipoglu there, CGTN's global economics analyst and CEO of BERI.